For 2025 end of year, we achieved 2.78%, which is well within our range. Things went very well. It performed exactly as expected, and we now have well over 18 months of track record. It's been very stable. Each month is pretty similar, and it's just a classic credit distribution in terms of the performance. So we're quite glad with what it's done and how we've got there, and I think members are quite happy with their Bitcoin returns.
Yes. And looking at that performance, I mean, we've been through very interesting times last year. Remember the October 10th of the last year, what happened? So many liquidations happened in the crypto market. There was a day with a really significant market movement. I think we were talking about billions of dollars of liquidations. Tell us like how the fund reacted that day. Was there any impact of that on the fund?
Yeah, okay. So it's important to understand that the fund is kind of different in terms of its return distribution relative to a fund which is trading in the market and has some kind of market-based return, which can be fairly volatile. We're a credit fund, which means we lend Bitcoin, and every month we get an interest payments. So the distribution of returns fairly consistent. Now, the main risk we face on an October 10th day is, let's just say someone we lend coins to wouldn't be able to pay interest or wouldn't be able to pay back the loan. So we do everything in our power to make sure we onboard and we do the correct due diligence and just track the best counterparties to lend to. So on a day like October 10th, the fund was stable. Our monthly return was exactly the same. And our main reaction is just to phone all counterparties, engage with them, ask how they performed, how things went. And very fortunately, as a result of all our work getting in the best counterparties, it was a very stable month, and counterparties performed exactly as expected.
Yes, and it's interesting in terms of those counterparties. We've got some queries like customers are interesting, like who exactly are we lending to, and who is borrowing this Bitcoin, what they are using it for, why these institutions are willing to pay the interest rate to our members, and all of those questions. Could you shed some light there on the
Yeah,
counterparties?
absolutely. So a few things we can never really reveal who we lend to, and this is just for a variety of reasons. And what we can do is really explain the nature of our counterparty. Now, just to have a conversation with us, we need to know that you have audited financials, which is kind of rare in the crypto space. Although a lot of our borrowers are more traditional companies, not just crypto companies, you also need to have a minimum equity capital balance of over $200 million. So that already sets the bar quite high. So we know if you have audited financials, large equity capital, that if we lend to you against a portion of that, there's a large amount of loss absorbing capital just to keep our loans safe, right? So the nature of our counterparty, most of them are listed, very large, well capitalized institutions. A lot of them have traditional business outside of crypto, which means that we don't really have wrong way risk, which means if anything happened to crypto, they actually have the traditional finance income stream to service the loans. So they're very low risk counterparties, and they often have a need to borrow Bitcoin. And we can go into the why, and I'll just give one nice example of why an institution may want to borrow Bitcoin. Let's just take an example of the ETF. A lot of financial institutions either offer the option to create or redeem ETF units. And if they have to facilitate that, basically what happens is if you phone them to create an ETF of, let's say, 1,000 Bitcoin, they have to go out to the market, buy the 1,000 Bitcoin, send it to the ETF agent. And only once they get the ETF back do you pay them, which means that their balance sheet is out 1,000 Bitcoin. And that means if you get significant orders, you would just never be able to facilitate that. So for these institutions, we lend them Bitcoin, which is unsecured, so they can take that 1,000 Bitcoin, let's say, create an ETF. Once the client pays them, they send the Bitcoin back to us. And these financial institutions are very well established, very well capitalized, and are excellent counterparties for us to have. And that's just a nice way of understanding one of the main mechanisms for us to lend Bitcoin to a financial institution.
Yes. And just looking at the fact sheet, I mean, we are mentioning in the fact sheet that we are not using any extra leverage in the fund. I think that's unlike some other funds that may be using leverage from time to time. And Like I'm just thinking, given that we haven't had any defaults to date and we are not using any extra leverage, like could you just explain how that is like critical safety feature for our members?
Yeah,
The fact that we don't have any leverage.
absolutely. So when we offer this product, we want our customers to get yield in kind, so earn Bitcoin on their Bitcoin, but we're not out here offering 10, 20, 30%, the kind of returns that you'd get from leveraging a strategy. We're coming in very modest. Like we mentioned, your net APY that you would receive is between 2 and 4%. And that's fairly conservative. If you just held Bitcoin, maybe you'd have to pay to custody it. So it kind of costs you. So now we turn that around to get a conservative, low risk way of earning Bitcoin on your Bitcoin. Now, for us to leverage or do any strategies that involve leverage would obviously go against this low risk approach we have for this fund. And that's what we see as the safest way to do things. We want our clients to have absolute confidence. There's no such thing as no risk, and there is credit risk involved in this, but we think it's the lowest risk you can get currently to get yield on your Bitcoin in kind.
So in terms of unsecured lending, for many people, this has been a red flag. People hear unsecured lending and feel that may be risky. So how do we get comfortable with that? Like, can you explain? I know that we are doing lots of vetting process under the hood, and we are looking at the credit parties, and we have credit worthiness criteria there. But what would you say to folks to people who are concerned about the unsecured aspect of it?
That's a great question, Piotr. So, as mentioned before, in our vetting process, just to speak to us, we mentioned you need audited financials and equity balance of well over $200 million. Now, that loss absorbing capital gives us great confidence. And we take a lot of confidence in that relative to, let's say, collateral. Because if I had to lend you Bitcoin and you send me some other coin, for instance, or something like that, that can always go to zero. But if we see your business, it's a good performing business, decent financials, a large amount of loss absorbing capital, we take confidence in that and we're happy to lend to you unsecured as opposed to taking in something else as collateral. So our confidence comes in the due diligence process, the large amount of loss absorbing capital that the counterparty has, and the fact that they've been running a long-standing, decent business that can well pay for all its commitments. But in the sense of how our users experience the product, I think there's a lot of things that you and your team have been working on just to make it as smooth as possible. And there's a few intricacies that we have to make sure our customers know about. So maybe a few things, if you can just explain how the 17th of the month cutoff period works and how the whole subscription redemption process works from there, just so users can really manage their expectations around this.
Yeah, so we really spent lots of time there polishing the product experience, so it's very seamless to all our customers to actually be able to add money to the fund. And the way it works right now is this product is available in the savings and investment area. Anyone can just open the app and see it there. And from there, they can create the subscription orders. We call them subscription orders. They can basically create an order to add money to the fund. And it's pretty straightforward because actually, once you pledge amount of Bitcoin, you will be able to confirm that order. And once it's confirmed, we will automatically send you a DocuSign document and with the one click, you will be able to confirm that order. So all it takes is just a few clicks and you can add money to the fund. Now, that cutoff date, which is 17th of each month, the reason we have it there is because with the incoming orders, we need to process those orders accordingly. And so we want to make sure that all the Bitcoin that is being scheduled to be subscribed for a specific month, it will go live that month and will start earning from the first of that month. And so that's why we are giving ourselves some of that time to process those subscriptions. Having said that, if you, for example, just to make it very visual, so if you, for example, today we have February 19th, if you were to place the order today, those coins would start earning on the April the 1st. And had you created the order before February 17th, so before the cutoff date, those coins would have gone live March the 1st. So this first day of the month. And the subscription day, by subscription day, we mean the first day of the month when the coins actually start earning for you. And then we also have the redemption, which I will talk about later, the redemption date, and how that works.
Yeah, and I think people need to understand as well, just for us as managing the fund and working towards allocating the coins, to allocate it once you've just received it a day before is difficult because allocating funds and sourcing counterparties is a variety of things. It could be legal work, engaging with counterparties, that sort of thing. So, that cutoff date just helps us make sure that as soon as your coins actually come into the fund at the first of the next month, we can get them working for you right away. All right, Piotr. Okay, that's really interesting to see how subscriptions work, but where probably users want the most clarity and how we did on the product side and how users actually get information around redemption is kind of crucial. And I believe it can even be within a range of dates. So can you just please explain the notice period and what the worst case scenario is? Like if you had to redeem at one point, what the worst is, and what the best case scenario is for redemptions, just so our customers can really manage expectations and understand how to get in and essentially how to get out of the fund if they need to.
Yes, absolutely. So the subscription and redemption dates are always visible in the app, so customers can always see them in the app and plan accordingly. Now, the 30 days notice period is something that applies during the redemptions. And actually, the redemption day is the last day of the month when actually your coins stop earning. And then after that redemption day, we give ourselves up to 25 days to actually credit Bitcoin back to your account. And so in worst case scenario, it can take up to 55 days if you count like 30-day notice plus those additional 25 days. But it can be shorter in the best case scenarios. And there is actually it's very transparent in the app because you can see what's the status of that redemption at any point in time in the app. And yeah, and then we've that also has been streamlined from the app, so there is no additional paperwork required. You just create an order from the app that you want to withdraw the Bitcoin, you confirm it from the app, you automatically get DocuSign, you sign the document, and that's it. From that point on, everything is automated, and you don't need to do anything. You will just get your Bitcoin back around those time frames,
Yeah.
so around from 30 to 55 days.
And I think it will help users just to get clarity around why that is. So let's just say you give your 30-day notice, your coins actually come back to Xapo within those 30 days, right? But Xapo, we can't distribute it until the fund administrator tells us exactly the amount we need to distribute for you. And that's that extra day. So, when we set up this fund, it was with the intentions to be very regulated, very established, just like any other major fund. And our fund administrator, once the coins come into us, it may take them an extra 10, 15 days to strike a NAV. And that's the crucial bit. So your coins are with us after those 30 days, but we can only distribute once the fund administrator tells us exactly the amount we can send. And that is just essentially why there's that extra delay. I know it can sometimes be uncomfortable, but that's the price of being very regulated and doing things properly. And it does also mean that when you do invest in the fund, that you should probably take notice that this is a long-term thing. And if you are in a rush to get your coins back, at least you know before you invest exactly the timeline that it will take to get them. Coming from a product experience now and a really cool feature that's up and coming, can you just explain how you designed the distributive and accumulative shares and how that fits into the product and different needs of our customers at Xapo?
Yes, absolutely. So our customers want to accumulate more Bitcoin, but some of them, they also want to live off of their Bitcoin. And what we currently have, the product experience that we crafted right now, allows our customers to accumulate more Bitcoin because those earnings currently are using accumulative shares, means the earnings are being reinvested back and they actually compound and earn more. That's great for some of our customers, but we have another also segment of customers who want to live off of their yield, and they also love that kind of they would love to have the Bitcoin denominated income, or having those earnings paid out to them monthly. And that is something that we've seen repeated, queries from customers. And we are going to make this possible actually soon. And this will allow our members to actually subscribe to the share classes that will give them BTC denominated income that will actually be realized and paid out directly back to their BTC savings account, so that they can actually trade this Bitcoin, use this Bitcoin, withdraw this Bitcoin, spend this Bitcoin. They can actually do something with that. And we know that there is an appetite for this, and we think this will be a great addition to the product that we currently offering. So the members will always be able to choose, do I want to accumulate more and let it compound? Or maybe I want to just receive the monthly payout, and those earnings would be sent directly back to my BTC savings account so that I can use them. And every month I would just get recurring earnings to my account. So we are pretty excited about this, and this is coming. And yeah, we hope that customers will love this.
Yeah, I think it's a big attraction. I mean, if you have a significant holding invested in the fund and you're earning, a distributive income in Bitcoin each month, you could certainly even live off that. And I think it's quite attractive. On the flip side, Bitcoin goes through all these cycles, prices going very high, low. If you're compounding interest in Bitcoin and it's just accumulating over time, it'll be very interesting to see how the next 10, 20 years of a long-term investment would perform. Historically, it certainly would have worked out very well.
All right, that was interesting conversation. Thanks, Gadi. I think that was pretty informative to our members. And if you actually have more questions around the fund and want to dive deeper into this, please reach out to your relationship manager. They will be able to provide you with more information about this product. And thanks, Gadi, for this conversation today.
Thanks, Piotr. That was really enjoyable and really had fun there. Thanks so much.